Hey, Kate, welcome to the show. Thanks so much for being on.
Thanks for having me, Alan. I'm a huge fan of the show, so it's really exciting to be here.
Yeah, thank you for that. So, very excited to learn more about your background and the really amazing firm that you've built and are growing to serve a real need in the financial planning community. So, let's start off sort of giving listeners just an overview of your practice, where you're located, number of clients, and then we'll dig into the details.
Sure, absolutely. I am located here in Brooklyn, New York. I launched my firm, really registered back in May 2020. So, right in smack
What
of
a
the pandemic.
perfect time. Can't wait to hear more about that.
Couldn't have been more convenient. I had a 6 month old or 8 month old, I guess, too. So, super easy. I have about 23 clients now. My practice runs with pretty much three different service models, comprehensive financial planning, which is included in every service model, but that doesn't include investment management. You can do comprehensive planning with investment management as the second service model. And
Okay.
then I have a family office consulting service, which is
Very cool.
a higher touch sort of product that involves, working deeply with a large family of significant wealth, things like bill pay, things like family meetings, things like advising on, you know, not just the portfolio I manage, but more private assets, which is somewhat more toward my background. And I only have one client in that, but it is something that I, may grow, but not actively looking to.
Okay. Yeah, we'll definitely dig into that. That sounds awesome. So let's talk about sort of your background and what led you to launching a firm. From my understanding from our conversations in your bio, you were sort of destined to be a financial advisor from birth, maybe. Can you talk about your early experience with financial services?
Sure. I think it's a good way to put it. I tried to get away. I did engineering in college and I really did not like it. So I come from a finance family. My father worked on Wall Street. His two sisters worked on Wall Street. My cousin is an investor. My husband is an investor. So from day one, my dad, we would talk about investing all the time. After he left Wall Street, he went to a mutual fund company. Actually, I interned for his firm as my first job in the mailroom. I didn't get a cool internship. I was like making copies and like
Well, they
sending
can't show
out
favoritism, of course.
correct, it was cool. I thought it was cool actually, which is a little sad, but he made me open a Roth IRA and start putting money in it. And I guess I kind of thought that's how people just were, like how families functioned. They focused on these things, on 401ks, on investing in the market. I didn't realize that was kind of unusual
Mhm.
until much later. But I always had an interest in personal finance. But again, I think I tried to sort of move into a different area. I was always good at math and science, so I was encouraged to try engineering in high school. My grandfather is a chemical engineer, was a chemical engineer. And to be perfectly frank, my dad and his sisters, they're all Black and, have faced discrimination and difficulty on Wall Street and kind of discouraged me from going toward it, especially investment
Mm.
banking, also because of the lifestyle. But the engineering road just didn't suit me. I had two internships, General Electric, which like I learned a lot, but it was kind of working in a lab in a basement. In my second summer, I was working on a sensor that was going to go inside a dishwasher. And that's great, like you need that sort of thing, but it
Yep.
wasn't exciting me per se. And I just said, this isn't going to work. And so my third summer, the summer before my senior year, I ended up getting an internship at Barclays Capital in New York and on a trading desk. And that's where I ended up after college in my first job.
And so you chose to stay, get your engineering degree versus changing into a new degree program at that point.
Well, it's actually a teeny bit embarrassing. My brother, who is a real engineer, makes fun of me. I actually have a Bachelor of Arts in Engineering Sciences. So what I did was, once I realized that wasn't going to be my path, I didn't push through all the requirements to get the BSc. And I just took other classes that interested me more, like capital markets, corporate finance, economics. So yeah, so I did finish that degree, but I wouldn't have been able to graduate and then really be an engineer by that point.
Okay, that makes sense. But still, I mean, I did not take any engineering classes, but capital markets not an easy. It's not like you went for easy courses. I mean, and it makes sense to go for relevant coursework based on what you're going to be doing. So tell me about that first job. It sounds like, again, you were sort of discouraged from getting into the industry. It somehow roped you back in. What was your experience on Wall Street?
Yeah, my family was like, don't do banking, like at least do trading, hours are decent. And I was in interest rate structuring, which is like kind of a proprietary trading desk. And we did also a little bit of research and trade recommendations for clients, all in the US interest rates. And it was like 6:45 to 6:15 kind of every day. So it was like
Those
better
are
than
the good
investment banking.
hours.
Yeah, those were the good hours, which is it says a lot about the industry. But I worked for a really brilliant guy, one of the smartest guys still to this day that I really respect. And I kind of found the trading floor fun. It kind of is like in some ways like the movies, that not like Wolf of Wall Street, not that crazy, but there were like constantly people making bets. And by the way, just for context, this was 2006. So this was pre '08. Things
Okay.
got less fun
Yep.
for sure. I left in September '08, so I kind of was there. My last day was the Friday before Lehman went under.
Wow. Okay. So
Yeah.
left really at the bottom.
Yeah. And I was like, whoa, I timed that well. I wish I could say that was my doing, but it was just luck. But honestly, it wasn't the right fit for me. There weren't a lot of women. There aren't a lot of women anywhere in finance, but I'm not great, really quick on my feet, like doing quick math. And like, so trading just didn't make a lot of sense for me. I want to be able to think about something. I want to be able to be really confident in calculations or in what I'm recommending. So that environment just didn't suit my skill set. It was cool. I learned a lot. I learned about a lot of different asset classes that I think you don't naturally get to learn about in many other places.
Yeah, but
But
before we move on, what is interest rate structuring? Because that does not mean anything to me.
fair, I mean, nor should it. So we were coming up with trade ideas and in some cases implementing trade ideas in products like US treasuries, US tips, interest rate options, interest rate swaps. So, which are, is actually a market, probably even, I mean, it has gotten more liquid than treasuries, I think, but basically trying to find opportunities where there were mispricings along the curve,
Okay. So a
or
lot of
maybe
it's interest rate arbitrage, essentially.
a little bit, yeah. It's super technical, but like things like a swap spread, like where are swaps trading versus the treasury at the same point on the yield curve? Is
Okay.
that too wide, too tight? Things like that. Not what I dreamed of doing with my life
Sure.
necessarily, but it gives you a cool opportunity to think about the economy and like what's going on with rates overall and the general economy and how is that going to play into these specific securities.
So you leave, Lehman Brothers goes under. What was the next step in your career?
Yeah, so I had my boss, the person I respected, came in, I think it was July or something, came in one day and was like, so I'm going to a hedge fund. And like when you leave a trading floor, like that was his last day. Like we didn't have
Mhm.
any notice. They don't really let you come back and trade. So the desk was kind of built around him. I didn't really know if there were going to be any other opportunities. And also I really wasn't that great at it. So, I'd been putting my resume out, trying to look for another job. And we had a lot of the people who traded with the interest rate desks we worked with were hedge funds. And so I knew like big macro hedge funds. I knew a little bit about that, but not much, to be honest. But I was approached for an interview at a firm called New Holland Capital that invested in hedge funds on behalf of a large Dutch pension. I was interviewing for a job to be an investment research analyst, generalist, interviewing basically hedge fund managers and getting to understand their strategy, getting to understand their portfolio construction, their risk management, and their firm, and deciding whether we wanted to invest in them. So I know that is what the job is now. I didn't really know 100% what the job would be, but I knew the people were really smart. Like when I met them, I thought they were like incredibly intelligent. It seemed interesting to talk to managers across every asset class. I think when people think hedge funds, a lot of times they just think like equity, long, short, going long and short stocks. And
Mhm.
it's so much broader than that. And I was offered the job. And this was in '08, as I said, and went there in September '08.
Okay. Yeah, how was it being there evaluating hedge funds as the market is just, like, absolutely falling apart?
It was very intense, right? Like, I mean, it was clear when I got there that even though actually the strategy there and the approach was to be as market neutral, beta neutral as possible. So not to move with equities, not to move with fixed income and credit. Of course, it did lose money, but did much better than the market. But it was stuff like bailing out hedge fund managers who had highly levered arbitrage trades where we had to add capital so that they wouldn't get stopped out by their margin providers. So it was like a lot of triage and a lot of opportunities, like looking at the unfortunate wreckage of the non-agency mortgage-backed securities market and buying things that at a price that made sense. So those were opportunities that played out over the following years, but we were sort of looking at those things then, right when I joined. And I covered an area that probably most people aren't familiar with, but reinsurance. We invested in reinsurance, which is insurance sold to insurers. And so I, again, like ended up doing a lot of that, had no idea that would be a big part of my life for 5 years. Didn't know anything about reinsurance when I joined, but that was the cool thing about the job, is that they're like, here's 4 totally different funds you're covering. You have to completely get up to speed. I thought they'd put me on like interest rate related funds. None of them were interest rate related. So, it was a really steep learning curve, but then I learned a ton. I was there for 5.5 years, and I was correct. The people I thought were really smart and really great colleagues. I met my husband there. He still works there. So overall, I think that it was a very important job in my life.
Yeah. And talk about just like the intensity of like getting to know, you said 4 or 5 fund managers, and you're accountable ultimately for the successes or failures of those investments, spotting issues and understanding their business well enough to explain it to folks who are putting their money in it, which is amazing, because there's no class in that. You can't just go take like a night course and get caught up.
No.
Like, you just have to go, roll up your sleeves. And I guess the folks in that business recognize that, no one's just dropping in with this magical knowledge from school. So maybe they're used to it, but that does sound like a lot. I mean, it's kind of like learning to be a doctor by just like going and being a doctor with no schooling.
Yeah, kind of. Exactly. Anything I'd done before was of like some, like not huge, not major use. I was really sort of, definitely learning as I go. I got to learn from, great mentors. I actually, at that time, we also all did the operational due diligence. So funnily enough, I was interviewing the chief compliance officer of these RIAs about their, compliance procedures and policies and personal trading and all the things that now it always kind of makes me laugh that I'm the chief compliance officer of an RIA, because I interviewed ones that were like, this was their whole job. They were really professional of like multi-billion-dollar firms. And while I take it very seriously, I don't think I'm on their level quite yet.
So then what was the path from, overseeing these hedge fund managers to starting your own RIA?
Yeah. So I was there at that first job in hedge fund research for about 5.5 years. And then over the following 5 years, I had 2 other stints doing the same thing, just at different firms for different types of clients. So rather than a pension, the next firm I worked at was more broadly for institutional investors and some high net worth, but also primarily pensions, but endowments, things like that. And then the third firm got me a lot closer to sort of what I'm doing now, which it's a multifamily office called Bessemer Trust and Trust Company, that I joined the hedge fund team there. So I wasn't working directly with clients, but we were building a hedge fund portfolio for high net worth and ultra high net worth clients of the firm, and sort of running that internally. And the clients could decide if they wanted that allocation in their portfolios. So there was some interaction, sort of, I don't want to say selling, but, helping clients understand the portfolio and whether they wanted to invest.
Were you basically a fund of funds at that point? Did you actually have a legal fund structure they were investing into?
Correct. Exactly. We were kind of like a proprietary fund of funds, like only accessible to the investors, the clients of the firm.
Okay. Yeah, it makes sense that obviously if clients are going to be investing into it, there's a clear conflict of interest there for the firm itself in recommending it. And so, I imagine clients at that level are doing a lot of due diligence to really understand what's in there. And if it's like a fund of hedge funds with funds underneath, that's a lot of layers of due diligence and just investment exposure.
Correct. And a lot of layers of fees, which is, it was an issue in my opinion. Hedge funds also aren't tax efficient for US taxpayers. Like when we were working for a foreign pension who has a tax treaty with the US, a lot of the capital gains and dividends and interest, they get, a tax credit against that. I don't exactly know how the treaty works, but you aren't really thinking about, it's not like they're paying like a capital gains and taxes on investment income. Whereas, and because it's a pension, but where you're talking about, US taxpayer individuals, you can have a lot of short-term gains built up in these strategies because of some of them are rapid trading, especially like quantitative or systematic strategies where they could be trading thousands or millions of times a day. So I started to feel a little like, I'm not sure that this makes so much sense if I were like sitting from the client side, even though I do believe that a well constructed hedge fund portfolio has a place in the right type of investment portfolio. But frankly, for clients, even of a ultra high net worth, it's pretty borderline to me that you would be able to build something that makes sense
Sure.
until you're talking about like hundreds of millions or billions and a very long time horizon and do it well at a fee, because most hedge fund managers just don't outperform the fee they charge or don't outperform the market and aren't really providing value. So maybe you can sense from these comments that I kind of was getting a little
Yeah.
sort of disenchanted with the space, and just with I wasn't getting to relate to clients really, right? Like we manage this portfolio, great. If it generates a good return or a little more alpha, then that's 7 or 10% of the client's portfolio. And you're kind of almost like a footnote. And, it's not a bad thing necessarily, but it wasn't giving me much satisfaction or feeling like I was making an impact. And, it was a cool environment to kind of see how these types of clients are served, like understanding the firm overall did give me sort of a window into, how wealth management firms operate and work with clients. But for me, I ended up launching my own firm because the client base there, I could have tried to move to the client advisor side, but it just wasn't necessarily a client base that I resonated with.
Mhm.
You can probably imagine. I mean, we're talking about 8 figures to walk in the door, 8 figures of investable cash. So what you get is obviously a much older clientele and not a diverse clientele for lack of a better term. So, and I knew that if I was going to do this kind of personal finance work, I wanted to do it with people I could relate to more and that whose lives I could really make an impact on at a younger age, where you can make some smart moves and 10 years later you won't believe how much of a better situation you're in financially. Whereas like working with ultra high net worth clients, of course it can be very rewarding, but there's a lot more about like tax optimization and avoidance, estate structuring, trusts, and interesting work. But I didn't really want that to be like the main drive of what I was doing.
No, I mean, it makes sense. I felt the same way working with older clients that were sort of in more preservation mode. It was like, I see where we're providing value, but it's not the tangible value that I want to be able to have. And ultimately, they weren't the conversations I wanted to have. And you're right
Exactly.
that, I mean, very small things that you can convince a younger client to do over the course of 20, 30, 40-year career have these, I mean, just unbelievably outsized returns on simple things like, let's use the match in your 401k. When you run the numbers out of just the impact of getting a client to do that, it's massive. So
Exactly.
there's certainly no shame in that. Advisors ultimately enjoy operating at different points of the life cycle of the finances. And historically, we've
Exactly.
been later on in the process. And it's just fun to see so many more advisors getting into the wealth creation side of financial
Mhm.
planning versus the wealth preservation maximization side. So
Exactly.
so what ultimately led you to start your own firm versus, trying to join an existing financial planning firm that had sort of a similar client base that you wanted to serve?
Yeah, fair question. I wasn't really aware of personally any wealth management firms that
Yeah, I
wanted
guess
to
that's fair.
serve other. Now I know of 1,700 firms with XYPN, but when I knew I wanted to go down this path, I started talking to a bunch of people at wealth management firms, just connections. And anyone who I talked to and said, well, I want to work with this type of client, like 30s, 40s, mid career, like high income, but maybe not huge assets. They're like, well, it just doesn't work. You can't
Mm.
charge enough because they don't have the AUM. And I'm like, no, I get it. But like, I want to charge a fixed fee for that type of client. And it was like, most people were like, oh, well, I don't really know. Like I don't, there really isn't necessarily another way to get to that client base other than like an hourly or a fixed or some
Yeah.
non-AUM based model. And just there are so few firms out there doing that. To be honest, another reason I wanted to start my own firm is because I really wanted to do it my way. And I wanted to get out of corporate culture, or at least corporate culture as I had experienced it at many places, which it didn't necessarily feel like I never was really able to be myself, to be honest. Like as a Black woman, I ran into a lot of sort of issues, and, you know, finance is still really not great for women, to be honest. And it hasn't really improved in terms of like number of women going into the industry for
Yeah.
decades. And I wanted flexibility. I knew I was going to have kids. Actually, when I left my last like corporate job, I was just pregnant, not telling anyone, but I knew I was. And I just wanted it to be up to me whether I succeeded, and not if I had, you know, gotten enough exposure with people higher up or having to depend on my boss's boss who, you know, frankly didn't relate to me at all to decide if I was worthy of a promotion or worthy of a new, a new
Worthy of your
responsibility.
salary.
Yeah.
Yeah,
So,
and it's a fair point that for many of us, it's impossible for us to understand, myself included, what it means to go to work every day and not feel like you can be your authentic self, and not even not feel like you can be, but you're not allowed to be, because if you were, you're not gonna. There's just too many barriers in that profession for you. So, again, it's impossible to understand if you haven't walked in your shoes, but it does make sense that, and I imagine a challenge when you love the work and you love the industry, but hate, I'm putting words in your mouth, but dislike the barriers ultimately that are totally unnecessary, but
yeah.
still very prevalent right now.
Yeah, unfortunately. The other reason I wanted to do it this way is like I just knew there was so much demand. I talked to women all the time who had tried financial advisors, who felt they were talked down to, that they weren't understood. Like I was the friend because I was in finance who people would be talking about their 401k, and I'm like let's go to brunch. I'll look at your investment options, do this and this, and like we'll have a mimosa. And even for my husband in finance, I was running our finances completely at home, and he was like, if I had to pay you for this, I would totally pay you for this. He's like, fortunately, I get it as part of the package, but he was like, people will pay you for this. Like, no question, because you just don't get that because you enjoy it. But most people don't want to think about their investments and 401k and, budgeting. I would pay a lot to avoid having to deal with it.
So you ultimately decided to launch a firm. You got registered in May 2020 with a 6-month old. Usually, at least sort of if you think about how people talk about entrepreneurship and parenthood are not normally synonymous. They don't normally happen at the same time. We tend to start a business so we can have kids, or we wait till our kids are a certain age to start a business. And you ultimately made the decision to take the leap. What were those early months like with a little one at home in the middle of COVID at home?
Yeah, it was not what I expected. For whatever reason, there were a lot of reasons the timing made sense. Like I was really sort of done with my old career. My husband was very stable in his career. So, I know you often talk to people about how did you prepare to really
Mhm.
go to making no money. And, we were in a good position where he was the breadwinner, and, that timing felt solid. But yeah, it was really, really tough during COVID. Our son, we started him in daycare in January of that year, and that lasted like 6 or 8 weeks before it shut
Mhm.
down. And then we were two people with jobs with a baby in a 2-bedroom apartment trying to work from home. Yeah, it was pretty messy. Look, it almost ended up, because it was so early in my process and I didn't really have clients
Mhm.
yet, or I had like a couple people I was kind of talking to or working with, more like friends. It felt like I had a lot of flexibility to take time and to, be able to watch my son while we didn't have any other childcare options, which lasted basically through July, and just started the business slower. And I had that privilege because we weren't depending on my income to grow right away. So, we were privileged in that way that I could just kind of slow it down and pull back. But it ended up being mostly like, I tried to work during naps. I worked after he went to bed. And, my husband definitely, like when he had breaks in his meetings, he would take on childcare and so I could, if I had a specific prospect meeting or something like that. So, but yeah, I kind of, and look, this was New York City. It was really scary. It was sirens 24/7. Like, I don't know if other
Mm.
places in the country necessarily experienced it that way. Every night, everyone would hang out their windows and bang on pots and pans to say at 7 p.m. to say thank you to the frontline workers.
Mm.
It was a really, really scary time. And we just tried to keep it together as long as possible.
Yeah, sometimes it feels like a lifetime ago, and sometimes it feels like yesterday. Walking down the street, just trying to get
Completely.
out of the house, and here it is super snowy, and you see no one. I mean, it was like
Yeah.
living in a ghost town. Like, where did everyone go? And yeah, I mean, the lifestyle in New York is not to be in your home 24/7. Like,
It is
I've
not.
seen that people use their ovens as like a closet for their clothes because why
Yeah.
would you ever cook at home? That's a
Exactly.
very, very different decisions, obviously, and just different lifestyle. And so, but you're absolutely right that maybe if you'd started the firm a year earlier, it actually would have been harder because you would have had a bunch of clients you had to meet with, regularly. And these things tend to work out. That being said, you have continuously grown. I mean, it's, 3 years in now from this recording. You said you have 23 clients, which means a pretty steady growth rate. I guess, what would you credit that growth to? Sort of how are prospective clients finding you at this point?
Yeah, so I've really been sort of word of mouth network model. I haven't done any marketing. I mean, I have my website, but I've been fortunate that the client base I'm targeting, primarily like urban tech professionals in their mid 30s to 40s, like either women or couples, where oftentimes the woman's sort of driving the process, not always, but and I just know a lot of people like that. And my friends know a lot of people like that. Once I decided I was going to take this step, which was maybe like, it was a good several months or maybe even a year. And I also had a year off. So that was like, I really had a lot of time to build up. Like, I left my job in February 2019 and I knew I was pregnant. So I knew I wasn't really going to start. And actually, I did the CFP app during that time
Okay.
in 2019 on an accelerated basis because of my CFA. And then I didn't start till 2020. So that whole time I was talking to people about it, kind of putting the word out there just with friends and friends of friends and my husband's friends. And that has led to, a good number of clients that are actually really a great fit. And I mean, I have clients who some of my close friends are comfortable with it. I know some advisors don't like to work with close friends,
Yep.
but I have a friend from preschool, I have a friend from high school, I have a friend from college. I have, a lot of actual close relationships where they've known me. And it's actually a really nice way to grow because these people already know me. So I don't have to build the trust with them. They trust me.
Right.
Um, but other than that, yeah, friends of friends. And then of course, client referrals. One of my maybe first or second paying client is like a super referrer. She's referred me to a bunch of people. Not all have come, but I find, like, I don't mean to be so gendered, but I find like women are great referrers. I have quite a few single women. It's like, I don't know if that's my niche, but I have a lot of either single, widow, divorced, like women or I have even women who are partnered, but who I really mostly pretty much work with them. And I find that, they're really willing to share, that they like working with me and they have friends in very similar situations. So it works pretty well.
Yeah, I mean, I'd have to pull up the statistics to get the numbers exactly right. But my understanding is, I mean, if you just look across the US, women are more likely, I mean, I think it's 2 to 1 now, are graduating with college degrees compared to men. Women are starting to out earn their partners,
Yeah.
they control the household finances. And
Hmm.
yet we still only 20% of CFPs are women. And I believe it's probably less than 1% are women of color. And so,
Probably.
there's this huge mismatch in terms of women who are looking for potentially for a female advisor, and there's not a lot out there. And so I can imagine that too, when they do find someone who they really connect with, they really trust, like, this is what we've been looking for. It just makes you very referable to be able to say, hey, you've got to go talk to Kate, like this, because in the end, our society also, we are getting more comfortable talking about money issues, complaining about, it's like,
Hmm.
oh, it's so hard to do this thing financially, and be like, yes, I had that same problem and Kate helped me solve it. So
Exactly.
that makes a lot of sense. But you said you haven't done a lot of marketing. I mean, you've grown very well in these first couple of years. Do you expect to start marketing, or are you growing as fast as you want to grow right now with a firm?
Yeah, I think I'm growing pretty much as fast as I can sort of handle in terms of how much I want to work. And I do have the one family office consulting client who definitely is more work than an average client. Like I probably have a touch point with her and or her family every couple weeks.
Okay.
So it's like, it's not like a 2 or 3 meeting a year schedule, but I'd like to build a practice, at least for right now, where I am in my life with now 2 young boys. I am building that lifestyle type practice, I guess, is it, for lack of a better term, where I can envision taking on maybe 10 to 15 more clients. My goal is kind of to turn it into a well-oiled machine that, like, I work 30 hours a week. That is nowhere near happening. The efficiency piece is not there yet. I've been bringing on some support, not as an employee, but I've been outsourcing some stuff. So yeah, I'm comfortable with that, like 6 to 8. I think I had 8 new clients last year. That felt like a lot to me. When people say like
Yeah.
they onboard 2 clients a month, I'm always like, whoa, I just can't really imagine doing that. And obviously every service model is different. So yeah, so if I can keep growing at, 6 to 8 type of clients for the next couple of years and keep enough, coming in to replace anyone who leaves, I'd be
Mhm.
really happy with that. And one day in a different stage of my life where flexibility isn't necessarily, I mean, it sounds like you have young kids too. I mean, my son is homesick today, right? Like,
Yep.
and we have full-time care, but like he wants mommy sometime. I need that flexibility. But that's not to say that maybe in 10 years or something, I wouldn't want to then really turn up the growth.
Absolutely. It's just stage of life, right? Again, I commend you for just being intentional with it, because I think that's what so many times I hear advisors not being intentional about the growth, and they're saying, "Oh, like I've grown too fast, I'm too busy." And I get that, but a lot of it just comes down to, at the beginning of the year and maybe every quarter sitting down saying, "How many clients, like how much do I want to work? How much do I want to make? How much do I want to work?" That helps you figure out, how much you should be
Yes.
charging. How many clients do I need to bring on in order to sort of grow the business at the rate that makes sense for me? Because, you're absolutely right, especially with a dual working parent household. Like, my wife and I joke that we've got 2 kids in daycare. We have 3 kids total, but 2 kids are in daycare. And we're like, we need a full time nanny just to take care of the kids when they're sick. Because
Yeah. Because
they're just
it's
always getting sent
literally all the
home.
time.
Yeah. I'm
Yeah.
like, I don't get this daycare thing.
No, it's
So,
crazy.
it is a lot. And so, therefore, maintaining more flexibility in the schedule makes sense. But anyway, so no, that makes a lot of sense. So I do want to talk about your 3 service models, because this is, I think, really unique in our space. So you said you have comprehensive planning plus investment management and then
Mhm.
the family office. So just starting with planning, I'm assuming are all of your clients, I guess, are comprehensive planning clients then.
Yeah.
Is that what they're coming to you for? Are they coming in saying like, "Hey, I want someone that looks at the whole picture," or are they coming in with like a pain point? I'm having a baby, I'm changing jobs, and then it sort of turns into comprehensive planning.
I think people often come in with a pain point. That's always the question I ask for every intro call is just like, why are you seeking a financial planner and why now? And then I stop talking and I try to let them talk as much as possible. And it may not necessarily be a very time sensitive pain point or something that just happened, but something like it's often just like I feel disorganized. And I think really the pain point when you dig under what people are saying is they feel anxious and they don't feel confident about their finances. And that's really sort of, I think, what draws people to seek out a professional. And these are people who aren't going to be comfortable as DIY, like with a robo advisor. Like they want that support to become more confident about that they have things in control. Multiple of my clients have come to me as women who are maybe in their late 30s or early 40s who say, you know what, I'm not sure if I'm going to get married. I'm not sure if I'm going to be partnered or I have kids. And I want to be independent and be able to financially support myself, and that's kind of this is the step they're taking to make sure they can do that. Yeah, I don't think people really think about comprehensive financial planning or like they even know what it is, or and a lot of people think they really need someone to help them invest. And they don't really think about all the other planning components, which frankly, I think investing is important, but it's definitely not the most important by far. I mean, getting invested is very important, but you could go to a robo advisor or like get a target date fund. And I think I put together good portfolios, but I don't think it's that different. It's all the other things that are really going to move the needle of are you optimizing your, tax advantages? Like, are you just saving enough? Do you even know where your cash is going? Are you protecting yourself? Are you protecting your family with insurance and estate planning? And
So you're not doing a lot of active management or private placements or anything like that outside of maybe the family office service. Like your typical planning client is not at a point where they're doing private placement type investments.
No, not at all. It's almost like a result of my prior career, which is like I know how inefficient or and high expense and frankly not that differentiated a lot of these private investments are, especially when it gets to the retail client. Like unfortunately you're kind of getting negatively selected against, right?
Yep.
Like you're not getting into like the venture capital like firm that's number one, right? Like Harvard Management Company and big endowments, like they've been in there for decades. You kind of, as it trickles down, I just don't know if people are really getting the quality that they
Mm,
should be. And
that's fair.
so I'm totally like index based or dimensional. Like, I do believe in the systematic sort of factor based, you know, looking for those risk premiums. I think that's there and that has evidence. I don't believe it really in like stock picking, mutual funds. Or not, I don't believe in it, but the data says it's not going to work on average. And I know the resources it takes to look at all those funds and analyze them and stay on top of whether they're still performing as they should. And like, you need a whole staff to do that well, in my experience.
For
So
PhDs, sometimes it seems. Um,
yeah, and so that certainly isn't anything that I'm able to do on my own.
so tell me a little bit about sort of this family office service and what that looks like. Because that sounds, you said a touch point every couple of weeks. That sounds distinctly different from, I'll say traditional comprehensive financial planning.
Yeah, absolutely. It really was driven by reverse inquiry because I was lucky to get connected to basically like a former colleague's friend's parent who, you know, needed help, but from a sort of style and just personality perspective was very turned off by a lot of the big, you know, wealth management firms and banks and just, doesn't want to be wined or dined, doesn't want people talking down to them, wants someone who's going to be looking across a very complicated sort of thicket of trusts and operating companies. But what they're really trying to do is get stuff out of like less liquid investments, so both private investments and operating companies, and get it more liquid. So they
Mm.
wanted someone who could manage just a more liquid portfolio.
Which
Um,
is really hard to do. Like that, not to understate, that is like going from illiquid to liquid. That it takes a lot of time and a lot of effort and tax analysis and such.
Yeah, and fortunately, I'm involved in that, but she also has a family member who is sort of dealing with a lot of the private stuff,
Mm.
who has sort of knows the history because they've been working on it. She was sadly widowed several years ago, and they've been working on unwinding all this stuff for years. And I sort of came in as things were getting more liquid, but I'm still working on like helping with how to sort of think about some of that, getting out of some of that, or do we want to do other illiquid things, maybe just smaller? But there, I'm working with her family, so I'll have calls, and because when I say touch points with her, I sort of mean the family. So I might,
Mhm.
she has several children, she has many grandchildren, so I am, talking to one of her children about their own budgeting and their investing. I'm, I talked to another child about their mortgage refinance, like I'm kind of, it's like a one stop shop for the whole family, kind of full as all you can eat. They can like call anytime, anyone. And I'm also doing effectively bill pay, not for all her bills, but for tax exempt gifts to education, toward education for the grandchildren, toward medical expenses for people. That is one sort of effective estate planning tool. I have custody and I'm literally doing that myself out of one of her accounts at my custodian. So I think that's really high value to a family office client, is just like taking things off their plate, simplifying it. Like she doesn't, like we kind of know the parameters and I can do it without bugging her, and I can also sort of sit between the generations and maybe hear some complaints from one generation, maybe hear some complaints from another generation. Like money, that amount of money really creates a lot of conflict, or can create a lot of
Yeah.
conflict in a family. And it's really complicated and emotional and can be anxiety producing, even having a lot of wealth. So I think that's actually a big part of what I do with that family is sort of work through those,
So you
feelings.
mentioned the
And
most terrifying word in our
I
space,
know,
custody.
I know, it's
And
torture.
yeah, so you made the decision to take custody, which I don't think a lot of advisors realize that this is a conscious decision that some firms make. We're all about avoiding custody if you don't want to have it. But basically, custody effectively means if you can control the money as your own, potentially write a check to yourself, then you are deemed to have
Sure.
custody and you have to prove on an annual basis that you are not actually writing checks to yourself.
Mm.
So can you talk about just the what it means for you to have custody? What are the repercussions from a compliance standpoint, whether it be record keeping or an annual audit that you're ultimately accountable for at this point because you are providing the service to your clients?
Yeah, it's been kind of, I think, nice for my mastermind group because they're like, oh, you can be the guinea pig for this and let us know whether it makes sense. And my advice is like, yeah, don't take custody unless it's really worth it and really essential to your practice. This client is, I think paying a type of fee that even like I have to spend a lot of money to, engage an auditor. It's going to be a lot of time. I'm like waiting any day for my surprise call. It really is a
Mhm.
surprise audit. They don't tell you when they're going to come ask. At first, it wasn't custody because I was doing checks and stuff, but then what I basically did was take one of their accounts and you can attach like a checking account to a brokerage
To
account
brokerage. Yep.
at TD. I'm a TD still. And so that allows me to just like send ACHs and I could basically transfer funds anywhere. So I
Yep.
am using that to transfer to like colleges and private schools and things like that. But yeah, the process is definitely a lot of work. In terms of record keeping, the nice thing about having it all come from the custodian is, you have that transaction history where I can just pull that up of like what was sent out. I think one smart thing that we did was we separated out one account and there's no money that can move. Like I don't have move money authority in and out of that account. So it's very contained in terms of, what I need to have audited. And then it's really about just like bookkeeping, keeping every receipt, keeping, emails substantiating or erroneous notes, substantiating the various transfers or the types of transfers I can make. And, the interesting thing about the custody audit is one step after they, are look at your books and records, one step is that they like put together sample transactions and contact your client and just
Mm.
kind of say, do these make sense? I as a part of this family office consulting, I don't want to put another burden on my client to meet my regulatory demands. So I'm going to have to, if you don't want them to contact your clients, you do have to have that like really, detailed record keeping of every transaction. And then like the email substantiating or other notes that can sort of replace that client contact.
I see. So there's kind of two levels. They can either contact the client or you can take more copious notes and reporting and that sort of thing in order to provide. Okay, that makes sense.
Yeah, but the audit is costly. I got a few different quotes. Most of them were more than $10,000.
Mhm.
I was able to find one that was more reasonable, but it's still costly and it's going to cost time. So I think that it's definitely a decision I wouldn't take lightly. I think I more made the decision to do this service, and then it was like I'll figure out what I need to do rather than I wish it were a little more deliberate of like here's like I knew I had to do something, but I wasn't quite aware of how hard it would be, or even just to find someone who wants to do it. Most accounting firms don't want to really do audits.
Yeah. Yeah, audit
So,
support is hard enough, and that's a fairly small audit.
mhm,
For us, it's really expensive. Like $10,000. What are you talking about? And
yeah,
for them, they're like, yeah, we do. Like we prefer $50,000 to $100,000 audits, not these small ones.
yeah, no, no one wants to get. It's just not worth it for them.
So as you're looking forward with the business, sort of what's top of mind for you in terms of what you're working on? Sounds like you're being very intentional with growth, but that's sort of happening. So do you have any other projects or new initiatives or hiring, anything that you're thinking about for the next 6, 12, 18 months?
Yeah, I do. So almost a year ago, probably now, I brought on a virtual assistant through Virtual Outsource Solutions, which is a company that, you know, hires and trains these virtual assistants to only work with fee-only fiduciary financial advisors. So that's been huge. I mean, it's a lot like XYVA. I just didn't have enough
Sure.
hours for XYVA.
Sure.
I had originally started to look into bringing on an assistant because I got pregnant again in 2021, and I was going to, take a maternity leave. And then I realized like I don't have anyone working with me. So I'm not sure how that's going to work. And it kind of didn't work, to be honest, because also I wasn't really able to onboard someone in time. So I didn't really have my assistant then. But
Okay.
that's been something I recommend to a lot of advisors. It's just been huge in terms of dealing with NIGOs, dealing with just my record keeping is so much better than it was before I got my assistant, just getting things in the CRM, getting things in client folders. It's just running much more smoothly. And
Yeah, it really is one of the huge benefits when you're a solo is that, to your point, like, we want you to be able to take parental leave. And yes, when you start your
yeah,
own firm, you acknowledge you're not going to take 6 months off for most people. Some may, but you're probably not taking 6 months off where you don't have any client contact. But you really want to have the flexibility to be able to take that time. And when baby's sick, like, you're not having to think about work and client emails and that sort of thing. And so I would say that's one of the number one reasons folks end up hiring either the XY virtual assistant program or others is because they want to take a day off, they want to take a week off, a sabbatical, a parental leave, just a real vacation, where you just like don't actually check
yeah,
email for 24 hours. And I bet if I polled members like of like true solos, no staff, when's the last time you didn't check emails for 24 hours? It's going to be like two people, and it's because they lost cell service or like, like it's not going to be a good
yeah.
reason. And so that's huge. I think that's amazing support to be able to help you be able to scale yourself, scale your time so you can focus on your clients and focus on your family at the same time.
Yeah, no, it's been huge. I still don't think I've gotten to that 24 hours with no email point, but we'll get there. And the next thing I'm starting to outsource is I've just contracted, or I'm going to contract with a power planner
Mm-hmm.
who's going to start doing some of the modeling for me. I don't really use necessarily, like, I'm in Right Capital, but I don't really use the Monte Carlo simulation a lot because of the age of my clients.
Yeah,
I've
Monte
heard a lot of
Carlo
people
for a
say,
client in their 30s is useless.
yeah, it's just, okay, you might like run out of money at 87 or you might die with like $12 million. It's just like,
Right.
that's not useful information. So it just intimidates people. So I have a lot of spreadsheets, but even that, it just, I think that I could do, you know, more proactive analysis, be like better prepared for meetings if I have someone like obviously the bottleneck of everything because I'm doing 1,000 things, but I also had, sort of realized I'm like, I can let this go. Like at first it seemed so weird to me. Like, why would I hire someone else to be the financial planner? But I realized, I love talking to my clients. I love having the meetings, getting to know them, getting to like clients with such cool careers and families and lifestyles. And I don't necessarily need to be the one, running their cash flow projections. Like someone can do that. And I don't really, for me, I'm not necessarily losing out on that. I've built out all the templates that I like. And that's the other thing with financial modeling software. Like one of the biggest questions I have clients in like New York, New Jersey, Connecticut, California, high cost of living areas. And they're like, how much house can I afford?
Mm.
Right. There's nothing like that in the financial modeling software. So I
Yep.
sort of built my own sheet that sort of keys off of like how much of their income they want to spend and, a range and what are the taxes going to be and what's the insurance. And, but someone like that to sort of take those templates and start, helping me do that analysis so I can spend more time on really more so I can not go out and get more clients, more so I can pull back my hours
Yeah, that makes sense.
and get to that real sort of ideally 30-hour a week.
30 hours a week. You heard it here,
Uh,
listeners, and anyone in your study group that's listening to this.
oh
Your job is
gosh.
to hold Kate accountable as you bring on the help. It's so easy to be like, I have some time. I'm going to bring on those extra couple of clients. And it's just like staying
Yeah.
really true to that time commitment is tough.
Yeah, absolutely.
So, Kate, this hour has flown by. So, as we're coming to the end of our time together, I'll ask you the final question. If there's one piece of advice that you wish you could go back and give your younger self, what would that piece of advice be?
Oh, I really think it's so funny because I like knew you were going to ask that because I listened to podcasts and you still don't have it. I just think I would want my younger self to know that there was a way to be myself, bring my authentic self to work and have that resonate with plenty of people and to build a business off of that. I think for a long time I was very concerned that that like what I wanted to put out into the world in terms of how I think about, investing and planning and like even like political stuff. Like I'm pretty open politically with my clients and I want to be on the same page as them. They want to be on the same page as me. And I can do that. I don't pretend, like, I don't avoid those topics. I try to attract clients that think are going to be on the same page.
Sure.
And if I knew I could do that, I probably would have just done it a lot earlier rather than trying to like fit into a corporate culture that just didn't suit me for so many years and at many different places. So I don't know. I think, yeah, if anyone is thinking of starting a firm, especially women, and you think you're looking at it in a unique way, or you just think you got something valuable, then I'm sure you do, and
Yep.
you can do it with some planning and, and just being patient and just, building it step by step.
Absolutely. Well, Kate, thank you so much for taking the time to come on the show and share your story, your journey to launching a really successful practice, and excited to see continued growth from here and the 30 hours a week commitment, which I'm going to check in with you at some point to
I
double check
know.
on that. So
Now I
thank
really
you
have to
for your
hold
time.
myself to it.
Well, thank you for
Thank
your
you so
time today.
much. Thanks, Alan. It really was fun. Appreciate it.